Hi guys, welcome back to this week's Technical Insights. Singapore stocks joined a global stock rout on Friday, 13th of October, to finish the week in the red. Investors were spooked by stronger than expected inflation figures in the US, which reignite fears about another interest rate hike this year. The STI index fell 1.02% or 32 points to end the trading week at 3,185 points. Across the broader Singapore market, losers far outnumbered winners 339 to 234. About 848 million shares worth 777 million were traded. Across the Asia region, it was a sea of red as well. The Hang Seng Index lost 2.33%, the Shanghai Composite Index fell 0.64%, and the Nikkei 225 closed lower as well, down 0.55%. For the week, the Dow Jones Index managed to advance 0.79% to end at 33,670 points. The S&P 500 climbed about 0.45% to mark its second positive week, ending at 4,327 points. The tech-heavy Nasdaq Composite Index was down 0.18% to close at 13,407 points. In Asia, the CSI 300 index fell 0.71% to close at 3,663 points. The Hang Seng Index on Friday tumbled 2.33% after official report shows that producer prices and consumer prices in mainland China trailed market expectation, but HSI index still ended the week up 1.87% to 17,813 points. Locally, our STI index managed to eke out a gain of 0.36% for the week, despite a more than 1% drop on Friday, as investors took stock of the stronger than expected inflation figures, which reignite the fears of another interest rate hike this year. Local bank DBS, UOB and OCBC all fell on Friday, but UOB and OCBC managed to notch a positive week. DBS ended the week lower by 0.06% to $33.77. UOB was up 0.28% for the week, despite a 1.22% drop on Friday to close at $28.34. OCBC Bank was the best performer among the three banks, up 1.01% for the week, although it fell 0.76% on Friday to $12.98. SGX meanwhile closed the week flat, while sliding 0.71% on Friday to $9.77. The biggest winner on our STI index was ST Engineering, which was up 3.39% for the week to $3.97, while the biggest loser was DFI Retail Group, which fell about 4.07% to $2.36. So for this quick technical analysis, let's look at both ST Engineering as well as DFI Retail Group. First up, let's look at ST Engineering, whose shares were up 3.39% to close at $3.97. The company shares managed to clock a new year-to-date high last Thursday at $3.98, not too far off last Friday closing price. The previous year-to-date high was about 1 month back on 15th of September at the level of $3.94. As you can see, the stock has been on a primary uptrend since the low in October of last year at $2.96. Connecting this low and the low of March this year, which is the year-to-date low at $3.35, we have an uptrend line which was tested on 10th of July and held pretty firm. The trajectory of the 20 days moving average as well as the 50 days and the 200 days moving average are also on the uptrend. The next resistance level to watch out for ST Engineering will be the high on 8th of June of 2022 at $4.02, while the immediate support will come in at the 50 days moving average, which is the line in yellow at $3.83. The 50 days moving average has been providing support for ST Engineering since the June of this year. Looking at the MACD indicator, the MACD histogram broke above the zero baseline last Thursday, signaling that positive uptrend momentum is building up. The MACD line is also seen diverging away from the signal line, indicating that the uptrend momentum may be expanding. The latest reading on the RSI last Friday was at 63. It was up from 9 October low reading of 43 and above the 14 days moving average of the RSI at 53. This shows that the momentum in ST Engineering share price is still healthy, as we have yet to test the 70-point overbought mark. As we approach the next resistance level at $4.02, investors and traders need to watch out for a pullback and a change in the momentum, both from the MACD indicator as well as the RSI indicator. A more conservative approach will be to wait for a pullback till the 50 days moving average, which is the yellow line that you see here, and reassess if the indicators are still in line that the primary trend that we observe is likely to continue and join the uptrend from there. Next, let's have a look at DFI Retail Group, whose shares sank by 4.07% last week to end at $2.36. The year-to-date high that was achieved on 6th of February at $3.31, and the year-to-date low was achieved on 23rd of August at $2.32. The primary trend that we observed since the year-to-date high in February this year is a predominant downtrend. The pullback that we saw recently since the high on 21st September at $2.75 means that the share price has now retraced about 15%, giving back most of the gains that we have in August and September. The 20 days moving average is seen converging towards the 50 days moving average. If the 20 days moving average crossed below the 50 days moving average of the yellow line, the downtrend is likely to exacerbate further. The immediate support that we have will be on 23rd August year-to-date low at $2.32. Below this, the next support level will be last year October low at $1.88. Resistance can be seen at the 50 days moving average at $2.53 and 21st September high at $2.75 as well. Looking at the MACD indicator, the gap between the MACD line and the signal line is still wide, but the MACD histogram has been consistent in the past 3 trading sessions, hence signal that negative momentum may have peaked. The latest reading we have on the RSI last Friday was 29, meaning we have crossed the oversold line and the shares are now in the oversold territory and may have a chance to rebound pretty soon. So for now, if we manage to close above the year-to-date low of $2.32 and either the MACD or the RSI starts to show sign of any rebound, we may be able to see the share price retest the 21st September high at $2.75 again. And with that, I've come to the end of this week's video. If you find this video useful, do consider giving us a like or a share and hit that subscribe button to stay up to date to our latest content. And I'll see you again next week in the next Technical Insights.